Hello traders at CMC Markets. Welcome to a fresh update by RRG Research for Monday the 20th of March, and I'm recording this on Friday the 17th before the market opens. My name is Julius the Kempenaer and I'm presenting to you from Amsterdam in the Netherlands. If we kick off with a look at the rotation for the various stock markets around the world, then I think the main rotation, or maybe the most interesting one that we can see at the moment, is the one for Nasdaq versus the Hang Seng. I always look for long tails that move in opposite directions, so there you can think about pair trading against these two and offset them against each other. So Nasdaq obviously inside the improving quadrant at a strong RRG heading, very close to crossing over into leading. And the Hang Seng is moving out of the leading quadrant and just crossed over into weakening at a negative heading. So that's clearly an indication for improvement for the Nasdaq and maybe further weakness for the Hang Seng. And if we look at, so these are pretty narrow indices. If you look at a more broader picture, think in terms of US versus Europe, then I'd like to look at the S&P versus the stocks index, and here you see a similar rotation, although it's less strong. The tails are a lot shorter, but here you can see how the S&P has actually started to improve and is about to cross over into the improving quadrant, where the stocks index has rotated around, and you can see that when we zoom in, you can see that it has rotated around and is now moving in an opposite direction of the S&P 500. So at a bigger scale, I think that we need to focus on further improvement for US markets over Europe. And you can see that if you look at the more detailed, you can see that the CAC is turning over, the DAX is running over, UK FTSE is running over. So that is sort of the general picture. And this is a weekly RRG. If we look at the daily version, and then I again go back at our Nasdaq versus Hang Seng, you can see that that's actually getting confirmed. You see how that rotation for the Nasdaq traveled through weakening and now moving further into leading, whereas the Hang Seng is making an opposite move. So we got both on the weekly and the daily RRG a clear indication that Nasdaq is about to continue its outperformance, and the Hang Seng is rolling over and going back to underperforming. So both weekly and daily are calling for an outperformance of the Nasdaq over the Hang Seng. If we go back to our Europe-US comparison, then you can see that that is kind of similar. So here you see the S&P making that nice turn back up, coming into that same direction, and here is the stocks index. And if you need to make a call about this, then so here the S&P is very close to the benchmark. Obviously, we're comparing to the MSCI World, the S&P, the US is a big chunk of that. And then you see stocks going the other way. The fact that the big tail is on the stocks, on SXXP and on the other European markets, sort of suggests that the comparison, so the improvement of the US over Europe, will be coming more from weakness in Europe rather than strength in the US. I hope that makes sense for you. So if we go look at a few of these individual charts, and we've got the Nasdaq here, and that's obviously still working to come out of that longer term downtrend that we saw in 2022. We had a bit of a setback after that breakout, but we're now breaking out of that consolidation sort of setback corrective move, and that's obviously a good sign for Nasdaq. So you can see how these RRG lines are actually curling back up. Looks like Nasdaq managed to shrug off this sort of temporary setback and continue its way higher and starting to get higher highs and higher lows at a bigger level. If we look at the Hang Seng, that's the sort of broke out, but we had trouble at around 22.5, and the relative strength tells me that it will be a lot tougher for the Hang Seng index to break beyond that level than the Nasdaq, which has already came out of that consolidation. So from a relative perspective, we prefer Nasdaq over the Hang Seng. We go to the S&P 500, then obviously this is probably a chart that everybody knows. We're still on the wraps. We're still in a series of lower highs and lower lows, but the improvement is getting there. If you want to look at this, that's a very short-term positive. The good news is that we held around 3,800. That was an important support level for the S&P 500. If you look at the daily, then this would be a low, this would be a low, the weekly chart, and this would be a low, this would be a low, and then we would have one which is slightly above the previous low, which is still a good thing because buyers came in and they're willing to buy it at a slightly higher level than they did back in December. But we still need a little bit more work to get out of this corrective move. You just saw the chart of the Nasdaq that has managed to break out of that resistance. S&P is not there yet. From a relative perspective, things are definitely improving. If you look at Europe, this is much more of a topping formation. You can see how that stocks index got in trouble in resistance near 465. A couple of times where in that area market peaked and bottomed, so that's usually a good indication that something's happening there. And we saw that happening here where we got like a double top or resistance area around 465, and then we broke some successive support levels. And we're now, basically there is plenty of room to move to 425. If you go back to the S&P chart, you can see that the S&P has already touched this low here, and the stocks index did not do that. So from the S&P stocks, Europe, US comparison, there is a lot of upside resistance for the stocks index and quite a bit of downside risk. I'd say back towards 425, and that's translated into those RRG lines that are rolling over while they're curling back up when you look at the S&P chart. For this episode, we decided to start looking a little bit more at the FANG stocks, because that's a very popular set of stocks to trade. And let's see how they behave on an RRG. So here is the RRG for the FANG stocks, for the FANG Plus index, I've got to say. Over time, the FANG acronym got extended a little bit, and these are the FANG Plus stocks. These are inside the FANG Plus index. You can actually trade that FANG Plus index, and these are the names that are in that. So here, I think there's a few takeaways. First of all, cluster of weak stocks: Microsoft, Apple, Google, Snowflake, Amazon picking up a little bit, but it's already rolling over, and Tesla way to the left. It looks very nice here, but it's at a very low RS ratio reading, and that usually makes it very difficult for a stock to pull it all the way back over. You need a lot of strength to actually make that complete move. So there's a risk that Tesla is rolling over inside, improving, and coming back down. And we know from experience that that is usually not a strong sign. So inside this universe, I think that the stocks that are really worth looking at from a long perspective are probably AMD, Meta, and Nvidia. And Netflix, obviously, inside weakening is also moving in the wrong direction. So it's so despite the fact that the FANG index itself is actually doing pretty well, it looks as if the main drivers for this move are currently AMD, Meta, and Nvidia. Now here is the daily version of that chart. Looks a little bit different, but you can see that AMD is still doing very well. That was inside leading on the weeklies. It's inside leading on the daily. Same goes for Meta. And you see that Nvidia is going through a correction. If we bring that chart back, then you can see that Nvidia is the highest reading on the RS ratio scale, and on the daily you can see that it's coming through a corrective move. So with these high readings, just like I told you about Tesla, there is a risk when a stock is inside improving and rolling over back down. It's very well possible for a stock to rotate through weakening and come back up and actually start confirming its strength. So that is definitely a possibility for Nvidia. Here you can see how Tesla has already moved into the lagging quadrant, sort of already starting to show signs of weakness. As I told you when we looked at the weekly tail, you can see that it is actually inside improving and it could start to roll over here, and it looks as if the first signs are already there for Tesla on that daily chart. We quickly go to the price chart of the FANG Plus index, then you can see it right here. And this is working in a very long bottoming process, and we just got a nice breakout of this shorter term consolidation, and I'm looking, you know, with a little bit of fantasy, you can see this as an inverted head and shoulders pattern, but we do need a little bit more work, and I think that if we break 6,000 on the FANG Plus index, that would be a really good sign, so keep an eye out on that. Then I want to go over a few individual stocks. We've got AMD, as I told you, that looks very nice on both the weekly and the daily RRG, and we see why that is on the price chart here, where we just broke very powerfully actually over resistance that was around 89, I've got to say. So the next level here to watch is around 104, maybe 105. But the bigger picture here is very clearly for AMD to actually work its way higher after this long downtrend and starting to put in and confirm a nice series of higher highs and higher lows. So AMD I would definitely put on my watch list for potential trades. The same goes for Meta. I mean, this stock has been under pressure for a long time, and after bottoming out, we got a big gap down here in November, and then we had that massive gap up here. And what's interesting is that usually, you know, gaps need to be filled. That's an interesting saying. You can see how they work as in this case as resistance. So we had that breakout gap, that breakdown gap, and then months after it, you can saw that the market just touched there before it actually broke higher. Now here's an interesting thing. So we got that gap higher, but we never closed it. And now the market's already pushing above that high that happened after that upward gap. This indicates that people are very bullish. The buyers were willing to get back into Meta platforms at a significantly higher level than the breakout level. So that's a good sign, especially now that we're breaking above that high. That opens up a lot of upside potential for Meta platforms. Quickly go on the downside. So here's Tesla. There is this massive topping formation that Tesla is working its way, and we had that rally back up. We bounced exactly against that old neckline, and it looks as if we're putting in a new topping formation at a smaller scale, but it's definitely there. And the upside potential for Tesla is definitely a lot less than, for example, Meta and AMD, making it a good potential trade on the other side. So that's for the FANG stocks, and now quickly move to some currencies. So here's the rotation for the G10 currencies on a weekly scale, and what we see here is that all these tails are coming down, and that points to dollar strength, because these are all expressed in the US dollar. So when Aussie US and Yen US and Euro US is coming down, that actually points to dollar strength. After a period of strength for all the other currencies, I've got to say. Now the big question, of course, is will this last? And if you look at the daily RRG, then you can see that these other currencies are already picking up strength again. So we're a little bit of a limbo. The weekly says that the dollar is strengthening, and the daily suggests that the other currencies are strengthening. So that probably properly reflects what's going on with the US dollar right now. Market is trying to find a new direction, and it's not very clear which way it is going. And I think that's best indicated by the euro dollar chart, where we had that massive dollar strength, euro weakness, culminating in a low around 95 cents. And now we're moving our way up, and I've showed that monthly chart a few times on this program already, and we're sort of hustling, I mean struggling, probably a better word, between 108 and 110, and we're now getting back here, and you can see how that 104, 105 area is now providing support. So I think that probably euro dollar's got the key to the direction for the rest of the world currencies versus the US dollar. And it really can go two ways. I think that this is an important level. If we manage to get below, let's take it safe, below 104 significantly, then the market has spoken, and we are in for a period of more dollar strength. Euro dollar will then weaken further, and we will see this rolling over back down, and we will see these tails to move further towards the lagging quadrant, pointing to US dollar strength. If the market is actually able to take out resistance on the upside, and we're talking about 108, maybe 110, then that whole thing shifts the other way. So for in the currency markets, and especially euro dollar, I think we're trapped into a range. If 104, 105 on the downside, 108, and stretch it out to 110 on the upside, that'll give you a clearer signal direction for a longer term, more pronounced move. Ladies and gentlemen, thank you for watching. This was an update by RRG Research, and we're looking forward to a new episode and seeing you again next week, same time, same place.